Good afternoon, everyone. On this Monday, June 25th, 2018, doing a market analysis video. I'm going to talk about the ES today, specifically how I traded this morning on the gap down. If we zoom in first to the daily chart, you'll notice a couple of things on today's move. Well, we bounced right at 2,700, big round number, and we also closed right at the 61.8 of this daily long that I have drawn up here, 27.21. So we've got a couple of big kind of levels that we've touched. The 2700 is also the kind of this previous high over here in the bottom of this box or rectangle that we had. And as we kind of look at the bigger picture here on the daily chart, the actual trend of general higher highs and higher lows is pretty much intact on the ES. I would call the swing low back on the 29th of May the major swing low that we would need to break to get really bearish. But what I would do at this point, since we broke the 61.8 of the long, is I would draw from highs to lows and see tomorrow or Wednesday or sometime later this week possibly, if we move higher from here, I want to see if there's a reaction at 27.48 and a quarter. Now, I just mentioned this 529 swing low. Well, if we come over to the VIX, as I like to do, notice the VIX broke the high of 529. And so that indicates that there could be some more sustained selling. Last week, I was looking at some of these bigger name stocks, and a lot of them had these topping tails and really the first signs of bearishness. Apple, even before last week, showing signs of selling off. Amazon, a bearish engulfing candle last week. And so, some of these stocks that have been trending very nicely are also, they kind of started to show signs of weakness, and then the market today then followed. If we look at the S&P, you can see that swing low back here. We're still holding it. The Dow, however, has broken its previous swing low on strong volume. The Nasdaq as well broken the swing lows. Now the Nasdaq also broke highs, so it's definitely one of the stronger of the four, if not we'll call it the second strongest. IWM, the Russell, the strongest, in that its highs over here are well above prior highs. But again, bigger volume on this decline. And the markets have started to break some of these. They don't have a very definitive swing low in the Russell until back here on the 29th as well. But does this mean that all bets are off for longs and we should start looking for shorts? Not necessarily, but I am going to draw up. I'm going to leave up the long for the time being just because we stopped right at the 61.8. But I'm also going to have the short up. And in the trading room tomorrow, it'll be interesting to see what the market gives us. Do we gap up? Or do we gap up or down, rather? If we stay within today's range, it could be a couple of days, since this range is so big, about 45 points, that it may be for some whipsaw trading. Now, in terms of today, one thing that I noticed in the last couple of days with these gaps that we've had, we've been getting a little bit of follow-through after we open up. So we gap, and then we sort of go in that direction of the gap fairly for a little bit of time, more than we've been seeing. So like Friday we gapped up, and then not so much movement in the direction itself of the gap, but more so in the direction that we move following the first 5-minute bar. So what do I mean by that? Well, we broke down after the first 5-minute bar, and then we had 1, 2, 3 bars follow that trend lower. And in the last week or so, with some of these gaps or even just openings that we've had a tiny gap down here on last week, and then continued selling to follow. And so today, with a little bit bigger gap, you have a little bit more chance that the market is either going to robustly rally and close that gap, or sell off and then get that panic selling, especially as we broke the 61.8. So simply by letting the first 5-minute bar close and placing a buy stop above and a sell stop below, use that same 6-tick stop on the ES and let the market break either or. In this case, it broke down. And then just trailing each candle's high, placing your stop just 1 tick above each candle's high. When we get to these inside candles here, I just leave my stop alone above the bigger body candle. Let these inside candles form. We break down again, and then you can just keep trailing your stop down. So, that took us about the first hour of the day. That low break of 27.43s, then eventually getting taken out at the 23.50s. So pretty solid move very early in the day, able to jump on the train, not necessarily picking any direction, just by placing that bracket around the first 5-minute bar. And it tends to work very well when we have bigger gaps, because you either have more room to run and fill the gap. Even if we went from highs, a 46 to the close, that'd be a 46 to a 59. That'd be a super great move. And if we gap down big and then continue, then you get the panic selling, and it kind of led us to the first leg lower. We ended up going quite a bit lower later in the morning. But once we came down, we were about an hour into the day, and I like to look for reversals in about the first hour of the morning. And so if I come over to my 512 tick chart, the next trade, simply by having these swing highs here being broken on this leg up. So I got out of the short, and that was right about here, just shy of 27.24s. And then just drawing from lows to highs, letting the market pull back to that 50%. You could either get long at that 50%. You could wait for the market to come down, break the opposing 61.8, and then draw up, set up in the opposite direction, either that first little swing high or breaking highs. Either of those, 6 ticks keeps you in the trade, and you can ride that up and just trail your stop on the way. It didn't really yield a bottom for the day, but it did yield another nice, 24s to it was roughly 29s or so, and another 5 points, kind of chipping away after a pretty big morning. So even if you're not trading the entire day, you can capitalize quite a bit on just those first couple hours of the day, and that's where I really like to focus my time. So tomorrow morning, Tuesdays, we always do a live trading room, and you can check that out over at eminimind.com/VIP, and we'll be just kind of going through the markets and seeing what they give us. 27.48.25, keep that on your radar. And if we do come up and break this 59.52, we now have a gap, an unfilled gap above us at 59.50s, so just above the 61.8, then it's likely that the market could still move to its 50% long target of 28.25s, even though we broke the 61.8. The fact that we closed right at it is fairly significant, and the fact that we bounced off of 2700 is also, significant. That we made the move down to that big level. We kind of got all those stops and panic orders out of the way, and then the bulls were able to push the market back up into what I would consider long territory in this 50 to 61. Now tomorrow we could gap down and have another big day down and close lower, and in that case I would just adjust this low anchor of the short to wherever those lows end up being. So we will wait and see, and whatever tomorrow brings, we'll be ready. So I hope you have a great trading week, and we will talk to you soon.